We'll be discussing about Exide Industries. So we have on the screen yearly chart. Yeah. So yearly chart is showing pure consolidation. Half yearly chart. So in the half yearly chart, one can see that the stock is at the near support of half yearly EMA line, right? Then it looks like that here we have a DZ and the stock is moving from the DZ. Now let's get into quarterly. Yeah, quarterly we can clearly see that the stock is moving from quarterly zone. Okay, this candle recently triggered this quarterly zone drop base. We can say this together candle rally and this peak point. Okay, so it means once it has triggered this high level wherein it has closed, almost it has triggered this supply zone. Next, monthly. Okay, we can see it is in the monthly, it is showing a good consolidation. Okay, the range is, you can say this is the broad range, which is around 210 to 220 to 150 140 range. Okay, then coming to weekly picture shows, okay, this demand zone was breached. In fact, it was a very good demand zone. This was breached. Let's get into, yeah, so here we have the origin at this point. Okay, but looking at the chart, we can understand if this low is broken, that 150 155, if 150 is broken, then we may see the stock going to these levels, 130 levels. Okay, but I don't think that will happen, but you never know, in market anything is possible. Next, coming to daily. So in the daily chart, it is showing now slight correction. Why it is showing correction? If we could see, it has triggered a supply zone kind of structure, origin of the supply zone, because from here the rally started. From this point the selling initiated, which has created this low. So once it has triggered this and it is now showing correction, what is the next thing which can happen? Now immediate support is this EMA. It will be very crucial for the stock. If this EMA doesn't hold, then we can say that it can come down. But you can see these consolidation candles. Okay, so here we have this DZ. It looks good, and there is one more DZ here. So on the bottom side we have multiple supports. Okay, now looking at the overall picture, it looks that the stock has triggered the supply zone and it has come down. It need not necessarily come down further. Okay, now it is consolidating. Okay, so overall we can say the stock is moving from good zone. It may go upside, and immediately on the downside we have EMA support, which is half yearly EMA support. One can see, yeah, which is near 170. That will act like support. Okay, these are all some key points. Now, other than this, what is the interesting thing which is happening in this stock is it is now trying to take the support of EMA. Okay, after here it has given a good breakout. After this point it has come near EMA and trying to take the support. Okay, yeah, so this is about Exide Industries. I am looking in this stock, my view is bullish because it is trying to take near this EMA support, and 170 should act like good support. Okay, so overall view is bullish. So based on this, what I can recommend is, this is Opsta Strategy Builder, wherein we can, if you want, you can go with futures, but not naked futures. Okay, so futures you can buy. Okay, so we have added one future position. So to protect this unlimited loss in future and to get the margin benefit, we can do is this thing, go with the put, add the money put. Okay, so we can add the money put. Now here we can see if our direction is correct. If our direction is correct, then we will make unlimited profit. Profit will be undefined. But if your direction is wrong, you will be making a loss of 28,000, 29,000 rupees. Okay, so you can go ahead with this if you can bear this much of risk. And the break-even point means from this point, like your profit or loss will start on either side. 178.5 is the point where your it is a break-even point. Above which, or 178.5 and above, profit will start. Below, loss will be there. And you know your risk. So maximum loss is approximately 28,980 rupees. So if you don't want this strategy, then you can go with purely option strategy. As we are making a bullish view, so we will first we'll delete this. Yeah, so I'll go for this call. We'll try to take slightly OTM calls so that we can get good risk to reward. That's what we are interested. But one more thing is, while executing this, we must make sure that the options are liquid. That is very important thing, right? So 190 call we will add, which is at 2.4 rupees. Let's check 200 call. It is at 1.75 rupees. We will sell this. So we are buying 190 CE, we are selling 200 CE, just to get very good risk to reward, right? So here we can say, if our view goes wrong based on today's option premiums, if your view goes wrong, we will be making a loss of 2,340 rupees. If your view is correct, then we will make a profit of 33,000, and the margin required is 21,874 as per Upstra. It may be slightly more or less if you do it in Zerodha or in any other broker apps, right? Yeah. So other than this, you can execute any other strategies. So there can be a strategy like yeah, we can try to execute with put side also. So put side means we will be making a put side bullish strategy, wherein we will sell at the money put. Let's say we will sell 170 put. We will sell this. To cover this, what we will do is we'll buy 160 put, just to avoid unlimited loss, right? So we'll add this. Yeah. So with this, here you can see that the maximum loss is more, the maximum profit is less. So we have to adjust this. We have to adjust this. To adjust this, we have to do a little bit of adjustments, but this can be done. But the thing is, here you should play with good RR. That is very important. So what you want to do here is, you want to sell at the money put and buy OTM put, just to make you don't end up making unlimited loss, right? Yeah. So that is the strategy in this case. Here, as we don't prefer much this, because here we don't get much RR. Okay. But then here the good thing is, like the put premium will erode, and the at the money put premium will erode more, and OTM put premium will not erode that much. Okay, because at the money put premium is slightly on the higher side, so definitely in this case probability of making profit will be more. But here the loss making will be also more, because you know it is the means you are buying the OTM put and you are selling in the money put. So if your view goes wrong, then you will make more loss. Means 5-point loss you will be making. In this case, 5-point loss minus this whatever difference you are getting, that will be the loss. Okay. Yeah. But we prefer more on the buy call and sell call. So this is another option, like this you can trade. Okay. Yeah. Other than this, there is one more stock which is from the same sector, Amaraja. In this stock also you can make strategy. As both are from the same sector, you can execute the strategy. Either you trade with future and one lot of put, or you can go for call buying. Let's see, 650 call is available at 8.9. Let's see some deep OTM put, which is having some good value. 670 is 5 rupees. 680 is 4.75. Yeah, this is good. But again, tomorrow when the market opens, we should get the same premiums. That is one more thing. So here you can see, if the here in this case the maximum loss is 4,000, maximum profit is 25,000. So again, this you can readjust, and you can just try to edit this. So this 680 we can make it 700, 3.3. Yeah. So you can see like this, you can increase the profit side, maximum profit side, and loss side you can minimize. Okay. Yeah. So exactly reverse of this, what you will be making is in put side. Will be selling at the money put and buying out the money call, because your view is bullish. Okay, when the view is bullish, we will be selling the put and we will be buying the call. Okay, so like this we can work out strategy and trade accordingly. So if you want to reduce this loss, then you can here slightly you can go deep OTM, so that your loss reduces. But again, it is not recommended to go too deep OTM, because again your probability of making profit will go down, right? This is the combination. Again, you can if you want to be more if you want to increase your probability of making profit, so this is one more thing. 620 is buy, again 620 we can sell 650, but again risk to reward it depends now. Yeah, so here your risk is 7,150. so if you want to reduce this slightly, you just change this strike to 630. Yeah. So here you will get a good RR. This is one, right? So it is just taking the trades by some adjustment. Okay, so you can try these things, and if you are willing to take this much of risk, then you can go ahead with the trade. Okay, yeah, again I am not recommending this trade. This just is a video for your it is a video for educational purpose, right? Yeah, thank you.